Hello friends, in today's video, let's look at an interesting item where the same item is treated in three different ways using three different principles in IFRS. My name is Pratij and welcome to Deep Dive into IFRS. You are a company engaged in providing cooking gas connections to households and businesses in your area. At the time of providing the connection, you collect refundable security deposits from all your customers. This deposit is refundable when the connection is surrendered, and the management expects that most of the customers will not surrender their connections so that the deposit will stay with the company. In this situation, should the customer deposit be classified as current liability or non-current liability? And suppose from the customer's point of view, assuming that IFRS is applicable to the customer as well, how should he treat this deposit in his books? The first view, a liability can be classified as current by an entity when it does not have an unconditional right to defer settlement for a period of at least 12 months after the end of the reporting period. In this case, whether most of the customers will surrender their connection or not is not within the control of the entity. So in essence, if a majority of customers do actually surrender the connection, the entity does not have an right and does not have an unconditional right to defer settlement for at least a period of 12 months. So considering this, the expectation of the management that most of the customers will not surrender their connection has no relevance with respect to the classification. So the customer deposit in this situation, as per this view, has to be a current liability only. Second view, the concept of substance over form is used here. Though all the arguments in the first view are valid, in a practical sense or a commercial sense, households and businesses alike require gas connections for extended periods of time, that is years together. So considering this, the cancellations or surrendering of the connections would be very minimal. So keeping all this in mind, the refundable customer deposits can be treated as non-current liability. The third view is by the Expert Advisory Committee of the Institute of Chartered Accountants of India. The EAC tells that if an entity does not have an unconditional right to defer settlement of a liability for at least a period of 12 months after the end of the reporting period, then it should be classified as a current liability. Use of substance over form does not have any effect here. The reason is because it specifically tells that when a specific event or transaction is covered by a specific provision in an Ind AS or IFRS, the concepts, the general principles like substance over form does not take precedence over the actual provisions mentioned in IFRS. Now finally, the customer's point of view, assuming that IFRS is actually applicable to the customer. So from his point of view, the deposit is actually recoverable on demand, but practically speaking, he will always require gas connection. So in that sense, he does not expect to realize this within a period of 12 months from the end of the reporting period. Also, there is no relation with the normal operating cycle, and this is not held for the purposes of trading as well. So considering all these things, this should be treated as a non-current asset in the books of accounts of the customer. I hope this small but interesting situation was useful to you guys. Till I see you in my next episode, thank you for your valuable time.